Welcome back to Iraqi Dinar Alert. We've got some huge news today for currency watchers. On December 20th, 2025, both the Iraqi Dinar and the Vietnamese Dong are showing some incredible strength against the US dollar. We're seeing reports of multi-month and even all-time highs. So, what's really going on, and what does it mean if you're holding these currencies? Let's break it down. First, let's look at the numbers. As of today, the market rate for the Iraqi Dinar is hovering around 1,413 dinars to the US dollar. That's a significant improvement from what we saw earlier this year. So, why is this a big deal? Well, if you hold dinar, you're probably wondering if this surge is real or just temporary hype. For Forex traders, these movements can signal major shifts in global capital. And for anyone watching Iraq's economy, a stronger dinar is often seen as a sign of progress. But the story isn't that simple. To understand what's happening, you need to know how the Iraqi dinar works. It's the official currency of Iraq, issued by the Central Bank of Iraq, or CBI. Unlike the US dollar or the euro, the dinar doesn't float freely on the global market. Its value is heavily managed by the CBI. So, when we hear all-time high, it's a bit misleading. These highs aren't usually driven by millions of global traders. Instead, they often reflect policy decisions or what's happening in local parallel markets. These brings us to the difference between official and market rates. The official rate set by the CBI is quite stable, usually around 1,310 to 1,320 dinars per dollar. But the cash rate on the streets of Iraq can be very different, based on local supply and demand. So when people talk about new highs, they're often referring to these parallel market rates, not a global Forex shift. So, is the dinar genuinely getting stronger? There are some good signs. Iraq's economy is looking better, with higher oil revenues and moderating inflation. This stability supports the currency. Also, recent policy shifts have eased some pressure on the informal currency markets. But it's crucial to remember, the dinar's value is still primarily a reflection of domestic policy, not global trading. Several factors are driving these movements. The Central Bank of Iraq's policies are number one. They control the official rate and can make decisions that cause these shifts. Second, Iraq's economy runs on oil. Stronger oil prices mean more US dollars flowing into the country's reserves, which helps stabilize the dinar. Finally, if inflation stays low, people are more likely to hold and use dinars, boosting local demand. Now, for anyone holding dinar, let's talk risks and realities. The dinar has very limited trading volume on international Forex platforms. This means prices can be inconsistent across different sources. What looks like a major high might just be a localized event. There's also a long history of speculation around the dinar, with people hoping for a massive revaluation. Or RV experts consistently warn that these predictions are unreliable and not based on solid economic fundamentals. Be very careful of scams promising unrealistic gains from dinar investments. Financial regulators have issued many warnings about these, so what should you do? If you hold IQD, keep your expectations realistic. Follow official rates from reliable sources, not hype. Understand that the managed exchange rate system is the biggest factor. For Forex traders, remember the dinar doesn't behave like other currencies. Its value is tied to Iraqi policy and oil prices. Looking ahead, what should we watch? Continued economic reforms in Iraq are key for long-term confidence. There's also talk of a digital dinar, which could modernize the whole system. And of course, global oil prices and political stability in the region will always be the most important factors for the dinar's future. So, the final takeaway is this. Yes, data shows the dinar has strengthened, but no, this isn't a free market rally like you'd see with the euro or yen. It's vital to balance the exciting news with a clear understanding of how Iraq's economy and currency system actually work. Be informed, be cautious, and separate the facts from the speculation. Viewers seen the headlines about the Iraqi dinar hitting new highs. It's a hot topic, but today we're going to talk about a different currency that's quietly stealing the show, the Vietnamese Dong. While everyone's focused on Iraq, the Dong has become one of Asia's most stable and resilient currencies. So, what's going on, and what does it mean for you, too? Let's break down why the Dong is getting so much attention from analysts. First, Vietnam is an absolute powerhouse for exports. Think about the electronics in your home. The clothes you wear, a lot of that is made in Vietnam. This creates huge demand for their currency. Second, major global companies are pouring money into the country, a trend known as foreign direct investment, moving their factories and production lines to Vietnam, which further boosts the dong. Add in a consistent trade surplus and a very stable central bank policy, and you have a recipe for a strong currency. The State Bank of Vietnam is actively managing inflation and volatility, making it a currency that institutional traders trust. Now, let's compare this to the Iraqi Dinar. A key difference is how their value is determined. The dong's strength is money-driven. It's bought and sold on global Forex markets, just like the euro or the yen. Its value reflects real economic activity. The dinar's strength, on the other hand, is largely policy-driven by Iraq's central bank. So, when you hear the phrase all-time high, it means very different things for these two currencies. For the dinar, a high usually refers to an improvement in the unofficial market or a rate adjusted by the government. For the dong, a high is a legitimate, verifiable peak against other major currencies, backed by solid economic fundamentals. The lesson here? Always look behind the headline. The central banks are the real power players in this story. The Central Bank of Iraq has been working hard to strengthen the dinar. They've tightened control on US dollar outflows, pushed for digital banking, and cracked down on illegal currency trading. These moves are all about creating stability and encouraging people to use the dinar domestically. This makes the dinar appear stronger, even without a major revaluation. Meanwhile, in Vietnam, the state bank has a different strategy. They practice a balanced approach, sometimes intervening to prevent big shocks, but also allowing for controlled flexibility. This supports their export-driven economy while keeping things stable. It's this reliable management that has earned the dong the trust of global analysts. So, what are the financial experts saying about all this? Most agree that while the Iraqi dinar is getting more stable, a dramatic overnight revaluation is highly unlikely. The Vietnamese Dong's strength, however, looks sustainable as long as global trade stays strong. But no investment is without risk. For dinar holders, things like political instability or a sudden drop in oil prices could change everything. For those trading the dong, a global recession or a slowdown in exports are real threats to watch out for. The golden rule in currency is simple. If it sounds too good to be true, it probably is. Looking ahead to the next few years, what can we expect? For the Iraqi dinar, the most likely path is gradual appreciation and continued stabilization. The focus is on normalizing the economy, not on creating a lottery ticket. For the Vietnamese dong, the outlook is very positive. It has the potential for continued strength and is seen as one of Asia's safer emerging market currencies. So, what are smart investors doing right now? They're not chasing hype. They are diversifying their portfolios, closely watching central bank statements, and tracking economic data like inflation and trade. They use news about the dinar and the dong as economic indicators, not as a sign to bet the farm. Here is the final verdict. Both the dinar and the dong are showing real signs of strength based on genuine economic improvements. But this is not a guaranteed get-rich-quick opportunity. The investors who will truly benefit are the ones who stay informed and act with patience, not panic. Spree wealth in the currency market is built through discipline, productivity, and a deep understanding of the forces at play. We've cut through the noise, and now it's time to look at the future. Forget the hype. Let's talk about what the experts really think will happen. Starting with the Iraqi dinar, there are three realistic paths forward. The most likely scenario is a gradual appreciation. This isn't a sudden jump, but a slow, steady strengthening over several years. It relies on the Central Bank of Iraq maintaining a managed exchange rate, keeping inflation low, and seeing stable oil revenues. As the parallel market gap shrinks, domestic confidence grows. This scenario rewards patience, not wild speculation. 2. The second possibility is long-term stability. Here, the dinar stays within a narrow price range. The government's focus shifts from currency drama to real economic reform, prioritizing stable wages and affordable imports. The dinar becomes predictable and reliable for trade. which is a huge win for the economy, even if it doesn't make exciting headlines. Third scenario, a sudden revaluation or policy shock, is the least likely. This is the fantasy many speculators dream of, an overnight change that makes them rich, but in reality, central banks avoid this at all costs. It's extremely rare because it creates massive economic risk and market confusion. Experts strongly advise against betting on this outcome. Now, let's switch gears to the Vietnamese Dong. Its future is tied to different factors: exports, productivity, and global demand. The most likely scenario here is controlled strengthening, as Vietnam's export growth continues and its manufacturing sector dominates. The dong will likely appreciate gradually against the US dollar. 2. This builds investor trust and solidifies Vietnam's strong position in Southeast Asia. A second possibility is managed neutrality. If there's a global economic slowdown or weaker consumer demand, the State Bank of Vietnam might choose to keep the dong stable. There would be no major gains or losses, just reliability. This path still keeps the dong as a dependable currency in the region. Theme: the least probable scenario is an external shock, like a global recession or a new trade war. This could cause temporary weakness, but Vietnam's central bank would likely intervene. The country has a proven track record of resilience and would be expected to recover. So, what are the key triggers that will decide which way these currencies go? 4. The Iraqi Dinar. It all comes down to oil prices, political stability, central bank transparency, and reducing the economy's dependence on the US dollar. For the Vietnamese Dong, the big factors are global trade cycles, US-China relations, and whether Vietnam can continue attracting manufacturing and maintain monetary discipline. Across the board, experts agree on a few key things. Currencies don't grow on rumors. Strong economic fundamentals always beat speculation. Central banks hate surprises, and stability is far more valuable than hype. Long-term reform is what truly matters, not short-term noise. So, what's the takeaway for you? If you hold Iraqi Dinar, think in terms of years, not weeks. Vote. Avoid emotional decisions driven by social media rumors, and instead track actual policy updates. If you're involved with the Vietnamese Dong, watch the export and inflation data closely, and always respect the central bank's signals. For everyone watching, remember that exciting titles get clicks, but solid data builds wealth. Oh, education is always better than prediction, so always question your sources. Looking at the big picture from 2025 to 2030, the Iraqi Dinar has high risk and very high speculation, but medium growth potential. The Vietnamese Dong has lower risk, high stability, and medium to high growth potential, with very little speculation. Here's the final message for smart viewers like you. Jets. Both the dinar and the dong are showing signs of strength. Yes, economic reforms are crucial. But no, getting rich overnight is not a realistic expectation. Your biggest asset is knowledge. The real winners in this game aren't those who guess right, but those who truly understand the economic forces at play. Thank you for joining me on this series. If you found this analysis helpful, make sure to like, subscribe, and hit that notification bell so you don't miss our future content.